If you're planning on buying a home in 2026, St. Louis might be one of the best markets in the country to do it. And the last 3 years of data, combined with the amount of money being poured into our region, paints a pretty clear picture of where this market's headed. When you look back at the numbers from January 2022 till now, something becomes crystal clear. St. Louis didn't slow down, it quietly built momentum. We watched interest rates climb from the mid threes to around 7%, and yet the market didn't collapse. Instead, values in all three major areas, St. Louis City, St. Louis County, and St. Charles, either held strong or pushed even higher. City prices jumped from 212,000 to over 300,000. That's not a struggling urban market, that's a city with growing demand. St. Charles surged from 272 to 372, which is the kind of growth you see in a high demand suburban market. St. Louis County stayed steady, then climbed back. It's a healthy, stable middle ground that signals long term balance. And this isn't random. This shows the region has more underlying demand than people even realize, even when the rates are working against buyers. And if you look a little deeper at specific types of homes, that's where things get even more interesting. I know it sounds strange, but homes with 4+ bathrooms skyrocketed. In the city since 2022, from 517 to 671, in the county over $200,000 of appreciation, in St. Charles $300,000 of appreciation. So this tells me two major things. One, the luxury market in St. Louis is heating up, as it has been the past couple years. It's one of the more affordable luxury markets, as well as multi-generational living is absolutely becoming a driver. I've seen it plenty just out showing houses or having open houses or having listings. People want bigger, more functional space and they're paying for it. Starter friendly homes are also climbing. Two bath homes in the city went up $60,000 over the past 3 years. Two bedroom homes in the city went up about 40,000 in the past 3 years. In St. Charles, two-bedroom homes went up about 120,000 over the past 3 years. This is the sweet spot for first-time buyers, investors, and downsizers, and the competition is pushing prices up pretty fast. When both the entry level and the luxury end of the market are rising at the same time, that's a sign of a market expanding, not contracting. And here's something people forget. When billions of dollars flow into a region, such as St. Louis right now with downtown Chesterfield, plenty of development out in St. Charles, and a lot of projects happening in downtown right now, the impact doesn't stop at the commercial projects. You get better looking corridors, cleaner streets, more functional neighborhoods, new small businesses, and more people want to live nearby. And all of that starts to seep into the residential side. Homes near areas that are improving even slightly suddenly become more desirable. Buyers notice it, investors definitely notice it, and prices respond. Even with interest rates bouncing between 6 to 7% over the last 2 years, our region stayed very competitive. Inventory stayed low, and days on market stayed tight. And if rates settle into the mid fives or low sixes in 2026, we're going to see a fresh wave of buyers hit the market. And they'll be coming into a region that's more developed, more connected, and more desirable than it was even just a few years ago. So, what does all this mean? Well, my prediction is for 2026, St. Louis City is going to surprise a lot of people. I think it'll compete with St. Charles for the strongest home appreciation. Chesterfield should start making a big climb as they start going underway with the downtown Chesterfield development. The market will feel more balanced with sellers offering some concessions, but it'll still lean a little more towards sellers. And if rates stay in the mid fives to low sixes, expect another wave of buyers and another push upward on price.